Welcome to my noiseless investing channel. Today is 19th September and I'm recording 11th episode of the weekly stock discussion series of Indian market. So today's topic is market correction ahead? There has been a lot of talks around in the market that the correction is due for a long time, but nobody can't predict the market accurately. So here we go by facts and we'll try to understand what is the current scenario and what can be the possible scenarios in coming days. Before we start, let me tell you a little bit about noiseless investing. So noiseless investing is a purely technical approach in investing and trading. So here I'm using point and figure charting method, which is a very old method of charting, more than 100 years of use in the market, and there is little awareness about it. So through this channel I'm trying to make people aware more about this old method of charting, which is very powerful and simple to use. And there are multiple tenets in noiseless investing. So these are the cores of noiseless investing. Like I am taking momentum stocks in this model portfolio which I discuss here. I am also using relative strength concepts, and the risk to reward ratio is always a very important criteria in our investment. And the most important part every time I discuss is the risk management, position sizing, diversification, asset allocation, those things, which also involves investing psychology. And this is definitely going to be helpful for technical analysis users, and fundamental analysis users can also use it to find the good entry points and find out stocks which are in momentum and good reward to risk ratios. And these strategies are applicable over a range of markets, be it equity, index, mutual fund, crypto, gold and other commodities. So as usual, the format of discussion will be the first index analysis, then market breadth, then model portfolio, and then the tracker which we use for documenting all our analysis. So let us go to the Nifty 50 chart first to see what is happening and what can happen in coming days. So this is the point and figure chart, and currently we are in the 1% box size. So still there is no correction that has happened in 0.25%. As you can see that there is no correction. So Nifty is just going around, going up and up. There is no signs of bearishness yet. Let us discuss now Nifty 500, which is a broader index which involves small cap and mid cap stocks as well. In that as well, we can see in 1% box size there is no correction. In 0.25% box size there is no correction. In previous week's video we also discussed this, that we were expecting a little bit correction here, but it is continuously is going up. So that is there. Next let us discuss about Nifty mid cap. So in 3% box size nothing, no correction. In 1% box size there was a correction and it is now the double top buy. In 0.25 box size there is a correction. So this has happened, which is a recent formation, but if it again follows through with a double top buy here, that will be a very bullish sign. So in 0.25 box size also as well, mid cap has corrected a bit in 0.15 box size as well. Let us look into the small cap index. In 3% there is nothing, and 1% box size there is a correction here, and which is it has gone through with a double top buy. In 0.25 box size we are yet to see a correction here, and so although mid cap has had a bit of correction, in small cap we are yet to see a correction here. And also in 0.15 there is a little bit of correction, but in 0.25 we are yet to see a correction here. So this is the current scenario. As the box size goes lower, the time frame is also going lower. So in immediate term I think there is some correction pending in small cap and mid cap space. Now let us go to the market breadth. So when we combine these two things, we will be able to correlate what is going to happen in the future. So as you can see that this is the market breadth of Nifty 450. I specifically exclude top 50 stocks, as I don't think those stocks will be a multi-bagger unlike the other 450 stock space. So here the value is currently at 71. So what does that mean? That means that currently 71% of the stocks in this universe, that is Nifty 450, are going up. So we discussed here that it almost touched 30 here, and then it turned back, and there was no looking back. So currently the breadth is at 71, and if it goes about 75-80 levels, that would be the time to be cautious. That means that 75-80% of the market is going up, and that is bound to reverse, that some stocks will correct, and then so that is the use of breadth. And you will understand that why I'm saying that the market correction might be in round the corner, as the breadth is still not touched 75-80, but it is near that, so you have to be cautious a bit. Let us now go to the model portfolio, and nothing has changed in the portfolio. No entry exit has happened in recent days, and this is a 16 stock portfolio, and mostly all has come from the momentum screener. And if you look at the diversification part, as per the sectors, it is well diversified across sectors, and in terms of market cap, I have highest allocation in small caps, but the distribution is even, almost even. Now let us go to the Nifty NI updates equity India tracker, which I use for documenting all the trades here. So I have been giving these analysis from last 2 months, and they have been documented here. So if you want to find the latest entrants this week, these are the latest entrants which has come into the tracker from this week's analysis, and you can also use it to find which are the good performers so far. These are the which are stocks which are performing well. And then if you want to find, if you are trying to make your own portfolio using this sheet, you can just go to the find out stocks which are just below the breakout levels. So that means that you can just sort these stocks, and just keep these stocks in your watch list which are on the verge of breakout. And so we'll just have a look into some of the charts, and before doing that, I'd also suggest you to sort it by reward to risk, because that will have a definite edge over the others. So you can sort by that, and then look into those charts which are just about to break out. Like here you can see Lakshmi Machines is almost on the verge of breakout. So let us have a look into the chart of Lakshmi Machines. So this is we use 3% box size for stocks. As you can see that this anchor column has been from the bottom and with a good volume, so the follow through buy will be a buy in our system. That's why I have taken in this sheet. So it's giving a good reward to risk ratio as well. Just 14% risk, and the reward is almost 190%. So yeah, this is one. Then we can also have a look into the Privi specialty chemicals, which broke out last week. It was shared before. So yeah, this is broken out. This anchor column has come out of a mini bottom and a range bound pattern. So that's why I had considered the follow through double top buy as a buy in our system. So right now it has broken out, but one can still enter if you're making a portfolio from scratch. So this is one, and let us also have a look into the Nelco. Nelco is correcting. Let us see how if it turns back and goes ahead. So here it is. We bought it over here. Let us see if it hits the stop loss or it reverses and goes on. Next is Gulshan Polyol. The symbol is Gul Poly. So this is one stock which has been it come out of a range bound pattern, although it's not a sideways range bound, but it is a range bound pattern, and a long downturning line was there before it formed the anchor column, and right now above 267 it will be a buy in our system. Let us also have a look into Tejas Net. It had broken out, but I think it is correction in the shorter box sizes. That is why it is currently near the breakout. So this is another one. Let us have a look into Linde India. Yeah, so Linde India, again it came out of this resistance, or you can say supply, with an anchor column, and the follow through buy was a buy in our system, and then it is now continuing to just go up, and it is again giving a good entry point here, reward to risk ratio, and that's why I have used this in my tracker. And Coforge is broken out, and ICIL is almost on the verge of breakout. So let us look into ICIL. So again you can see that this anchor column is part of this bottom here, mini bottom here, and it has already given a buy signal here above this point, but if you are risk averse, you can buy above 283. So that is when the final buy will trigger here. So ICIL is done. And also let us look into ISEC, ICICI Securities. This is also on the verge of breakout. It has come out of a mini bottom with a good volume, the anchor column. So above 787, it is a buy in our system. So that is how you can use this sheet to make your own portfolio. So that is it from this week, guys. If you're liking this work, do like and subscribe my videos. Thank you.